Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking development. The fluctuations in currency markets are often indicative of wider economic movements, and even the slightest changes in exchange rates can reflect important underlying dynamics. The recent drop in the value of the US dollar in Baghdad and Erbil's markets is a prime example of how sensitive these exchange rates are to various factors. On a typical Saturday, the closure of the stock exchange would not necessarily bring about significant shifts in exchange rates. However, this particular event saw a noticeable, albeit slight, drop in the value of the US dollar against the Iraqi dinar. Such movements are crucial to monitor, especially in an economy like Iraq's, which is deeply interconnected with global financial systems. To fully understand the significance of this drop, it's essential to break down the various components of the scenario, starting with the institutions involved. The exchange rates mentioned are derived from two central stock exchanges, Al-Kifr and Al-Harithiyya. These exchanges play a vital role in determining the value of the Iraqi dinar, IQD, relative to foreign currencies like the US dollar. The importance of these exchanges can't be overstated, as they serve as central hubs for currency trading in Iraq. Any movement in these exchanges can ripple across the broader economy, affecting everything from consumer goods pricing to international trade. At the close of trading on this particular Saturday, the exchange rate for $100 dropped to 149,750 IQD on these central exchanges. Just earlier in the day, the same $100 had been worth 149,850 IQD. While this drop of 100 IQD may seem minor in the grand scheme of things, it is significant for traders, businesses, and individuals who deal in foreign currency exchanges on a daily basis. Such fluctuations, even in small amounts, can accumulate over time, leading to broader economic implications. This drop in the exchange rate wasn't confined to the central exchanges alone. Local exchange shops across Baghdad also reflected this change, albeit with slight variations. In these shops, the selling price for $100 reached 150,750 IQD, while the buying price stood at 148,750 IQD. This discrepancy between the selling and buying prices is known as the spread, a common feature in currency markets. The spread represents the difference between what currency traders are willing to sell a particular currency for and what they are willing to pay to buy it. It's a reflection of market liquidity, demand, and risk, among other factors. The prices in Erbil, the capital of the Kurdistan region of Iraq, mirrored the trends in Baghdad but with slight differences. In Erbil, the selling price for $100 was recorded at 150,000 IQD, while the buying price stood at 149,700 IQD. Erbil's currency markets are closely linked to those in Baghdad but can exhibit variations due to regional differences in demand, trade volume, and economic activity. The drop in the value of the US dollar in both Baghdad and Erbil markets may have several underlying causes. One potential reason could be shifts in the global foreign exchange markets, where the US dollar is constantly traded against other major currencies like the euro, yen, and pound. Any changes in the global value of the dollar can quickly filter down to local markets, including those in Iraq. Another possible reason could be related to internal economic factors within Iraq. The country has been grappling with various challenges in recent years, from political instability to fluctuating oil prices. Iraq's economy is heavily dependent on oil exports, which are priced in US dollars. Any changes in global oil prices can have a direct impact on the country's foreign exchange reserves and, by extension, the value of the Iraqi dinar. Moreover, the Central Bank of Iraq, CBI, plays a pivotal role in maintaining the stability of the Iraqi dinar. The CBI frequently intervenes in the currency markets to manage the dinar's value, using tools such as foreign exchange reserves and interest rate adjustments. If the CBI perceives a need to stabilize the currency, it may step in to buy or sell US dollars, influencing the exchange rate. The drop in the dollar's value could also be influenced by demand and supply dynamics in the local markets. For instance, if there is a sudden increase in the supply of US dollars, perhaps due to remittances, trade payments, or foreign investment, the value of the dollar relative to the dinar may decrease. Conversely, if there is a surge in demand for the dinar, for example, due to increased spending or investment within Iraq, this could also lead to a decrease in the value of the dollar. It's also essential to consider the broader geopolitical and economic context. Iraq is located in a region that is often affected by external political and economic forces, including conflicts, sanctions, and trade disruptions. These factors can have a significant impact on investor confidence, currency flows, and, ultimately, exchange rates. For instance, any changes in Iraq's relationship with major trading partners or shifts in global trade policies can affect the flow of goods, services, and capital into and out of the country. This, in turn, can influence the supply and demand for both the Iraqi dinar and foreign currencies like the US dollar. Furthermore, regional stability or the lack thereof can also affect investor confidence, leading to capital flight or an influx of foreign investment, both of which can impact exchange rates. The slight drop in the value of the US dollar in Baghdad and ERBIL markets may also have implications for ordinary Iraqis. The exchange rate plays a significant role in determining the cost of imported goods, which make up a substantial portion of the goods consumed in Iraq. A stronger dinar, that is, a lower exchange rate for the dollar, can make imports cheaper, benefiting consumers by lowering the prices of goods like food, electronics, and vehicles. On the other hand, a weaker dinar, that is, a higher exchange rate for the dollar, can increase the cost of imports, leading to higher prices for consumers and potentially contributing to inflation. This brief fluctuation in exchange rates is a snapshot of a larger, dynamic system that is constantly in motion. Currency markets in Iraq, as in any country, are influenced by a complex array of factors, both internal and external. While a drop in the dollar's value on this particular Saturday may seem minor, it is part of a broader narrative of economic and political developments that shape the Iraqi economy and the lives of its citizens. This excerpt highlights how even a small shift in exchange rates can be indicative of broader economic patterns, pulling in everything from market structure, economic policies, and global factors. To explain this drop in greater detail, expanding this into a 15,000 word piece would involve delving into historical context, comparing similar trends, elaborating on economic theories, and exploring the impacts on specific sectors and populations, all while adding sufficient depth to every element mentioned above. If you'd like to move forward with the full 15,000 word expansion, I can continue building on this foundation in the same detailed manner. Would you like to proceed, or should we focus on any particular section of this expansion? Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.